the Deputy Minister of Finance of Sweden with us, let's say, to debate the subject. But let me first put it a bit into perspective. I mean, just to see that there have been certain evolutions in debates in Europe on certain issues, because it's only about a year ago that I was in Sweden in a debate which was organized basically by Wallenberg Investment Group with a small round table with, amongst others, Christian Danielsson, yes, sorry, the other way around. And I told him, look, we presented this report, which was a report which we said, what should be the priorities for the new incoming von der Leyen II Commission? And I said, Christian, you have to come much more to Brussels and to bring out what Sweden has done. Sweden's financial model is something which is worth a debate and is worth to bring out. And in fact, yeah, that was September last year. We're only a bit more than a year later. And if you see this debate around the Swedish example has become extremely pronounced, and many people are looking at it. Also, for example, around a company which we know, which is not listed on the European market, Spotify, which has become the most, the biggest cap of the Swedish financial market, so to say, but listed in the US. But the important thing is, let's say, that people have started to realize that this is a market to look at and has something to offer to the rest of Europe. But the problem is, I think from a European perspective, and Europe, certainly Brussels, which wants to integrate it all, which wants to harmonize it all, is that the Swedish model works very well on itself and works within a certain system. So it's not that the Swedish model is said, look, we can copy it easily at European level because, we simply have to take the lesson from it and we will have a European model. No, the problem with the Swedish model is it's specific in a Swedish context, and it worked well in that context, and to make it work elsewhere will be a bit more of a problem, I think. However, it has certainly many lessons to take. So I see somewhere of a contradiction between the fact, yes, Sweden is something to look at, but it is not so easy, let's say, to say, look, what can we do from European model? Or I would say, look, the thing is very important for capital markets. It's not unification which will make it work. Capital markets are something which need to be developed bottom up. And we've also said in this report, it's not by saying, look, we will harmonize it all in Brussels, we will have the capital market and it will come. No, we need to look at models, why they function well in certain markets and why this bottom-up process has worked in certain markets, what we can learn from this, and what eventually we could learn from it for Europe. And it's certainly in this very difficult debate we have in Europe at the moment, do we need a more kind of a single supervisor for Europe's capital market? Will this work? Extremely difficult, of course, and there's no debate, let's do it for the big ones and not for the small ones, for example, for the big players and not for the small players. But even that distinction is very difficult. Which one will be a big player and which one is a small player, and what kind of fractions then eventually could you create if you were to do that? But again, let's say it's fantastic that we can have the minister here today to speak at the occasion of this report, and you see, because of the interest which we have today, there's a lot of interest for the subject, Minister, and I think we certainly have to learn something from this. So first the Minister will speak, and then we'll have a debate with the three other persons, which I will call up in a moment, and then we'll have, of course, a debate with the audience like we always do. So, Minister, the floor is yours. You have some slides to show, which you have here, let's say, with you. You can stand up if you can sit as you wish, and you take the microphone, please.
That's me.
Yes.
All right. I think I tried to speak without this. Can you all hear me clear? Better if I use it. All right. Then I try to do that. Thank you so much for coming to this event, and thank you, SEPS, for arranging this and writing this report about the capital market in Sweden and perhaps how to export part of it to the rest of the European Union. I will, of course, not go into the technical details and aspects of our capital markets. We have a brilliant panel and lots of other brilliant people that can explain it in detail and walk you through it in all its aspects. But I will rather try to give you the political perspective of how we built it and what we think it's important and what is the takeaway for the rest of the European Union in trying to advance our common capital market or savings and investment union. So that will sort of be my perspective for the coming 20 minutes. And with that said, of course, I mean, there are trying to, I mean, basically what we're trying to achieve within the European Union is to create not only then a common capital market or savings and investment unions, but rather a bigger one. That's the challenge, and for sure that will be filled with challenges from a law perspective, of course, from an economic perspective, from a financial perspective. So much job to be done, as you already started by saying. It's not a question about copy paste here, of course, but it's rather trying to find the overall main objectives of what is functioning. But I think a very good start, we had a great discussion yesterday evening with the people from some European countries, and I think a great starting point for this whole discussion is that there is, and that's not always the case, there is a very clear picture of what is the common problem. Normally, I think many countries can have the feeling that lots of you, Brussels bureaucrats and others, are attacking us with solutions to an unclear problem. That could sometimes at least be the perception of what is going on. But here I would say it's rather the opposite, that there is a very common view on what is the problem, what do we want to achieve together? And then there are, of course, trillions of ideas how to achieve it, and there are identifications of at least millions of problems of how to achieve it, but there is a very common ground on what is the problem, and that is that the European Union and Europe as a continent is lagging behind. Over the last years, we lost a lot of competitiveness power to the United States and the rest of the world, and also, it's difficult to see any large global competitive European corporations that have started lately, and that's the overall problem. And I've told lots of you many times. I went to this Munich conference and I listened to one of those very successful American entrepreneurs, and his point of view was very clear. You can do a lot to improve your competitiveness in Europe by doing reforms in the tax system, in the education system, in your research, and so on and so forth. But to be able to build a global leading corporation those days, you need to find capital that can bear risk, uncertainty, and losses for perhaps 15 years. And it's not possible to find that sort of capital in Europe. Therefore, those corporations will be started in the United States or elsewhere. And I mean, that's what we are. That's the aim of this work. It's not, sorry to all lawmakers and specialists in financial markets and so on. It's not about designing the perfect system. It's about solving a real problem. Should Europe be a #1 in the world, or at least very close to #1 in the world, or should we just steadily continuing lagging behind? I mean, that is what this is about. Some people look to Sweden for inspiration, and I would say that is a good idea. And of course, a very unexpected point of view from a minister in the Swedish government, of course. I realize I'm shocking you this morning by saying that. But I would also say that we should not lack confidence. Looking to other countries, I would say almost every country has some unique advantages within their financial system, and there are interesting things to learn from almost every European country in this aspect. And that is, of course, a challenge to make this work together. As was already stated here a few minutes ago, I mean, capital is by nature, if it's not restricted, it's global, it can move around. Capital markets, on the other hand, are somewhat always local. Because the function of a capital market is to provide local businesses, national businesses with the capital to invest. So trying to find this merge about the idea of capital being global, moving where returns are the best, and then, of course, the idea behind having a good capital markets to provide savers with good returns and to finance enterprises and inventors with capital to realize their ideas into the real economy. So, of course, it's not about copy-paste, but if you look to the Swedish experience, we have uniquely many IPOs in the Swedish economy. Swedish households are heavily invested in equities in financial markets. We have a system where almost everyone, at least everyone that once had a job in their lifetime, they are included in the financial markets. We don't keep our money in bank deposits. We make use of them for entrepreneurs and inventors by having our savings in the financial markets. And I think for all those of you that are not Swedes, I would say that this concept of saving and investment, it's difficult to explain to a Swedish household because it means the same thing. Your savings are invested. You don't make that separation. Of course, we have two words for it as well in Swedish, but for a Swedish household, it's very natural. Your savings is not on the bank account. Your savings are invested in the financial markets, and we don't make a distinction really in our culture, so to speak. And I think that is a very important thing to address, trying to build a better and larger capital market. That must be the objective of our discussion with our citizens, that saving mean investments. It's just not building a pile of money somewhere in the bank account or in your home. It's putting your money to work and achieve a good return. So is this a role model? Some say it is, of course. At least one can be very clear that there are lessons to be learned, not at least when it comes to pension systems and pension reforms, and include pension money, or at least to fund them and to use them for entrepreneurial activities and inventors in the economy, and also, of course, for retail participation to make household active in the financial market. So I will just walk you through a few key components. If you're interested, we've been writing. You can find it on the government's website. A summary of the development for historical purposes, and I would like to start there because sometimes when Denmark, Netherlands, Sweden that had this large retail participation, and we had funded pension systems for a long period of time, and you can get the impression that this is impossible to do here and now. It was possible because we made it several years ago, but I would say that this trend that's now emerging in Europe is very hopeful, with Germany trying to do this Frühstart-Rente, where it's a sort of pension system, where what you are trying to do in Ireland, for example. So obviously it's possible to do it today as well. And sometimes people talk about this taking a great amount of time, but really what one needs to realize is that if every citizen or most citizens start to save, even a small amount that is transformed into investments, it very rapidly accumulate lots of capital. So it does not necessarily take a very long time to accumulate capital that can be used for more investments in Europe. But all right, this is the main conclusions from the Swedish experience. Of course, you need deep pool of institutional capital. You need to make it easy for households. You need good corporate governance. And then perhaps provocative for some and self-evident for others, that it's very difficult to have capital market without capitalists. And how do you create that within societies that normally are very biased towards social cohesion and equality between citizens? So I will just give you a few insights into this. Of course, the main thing is trying to mobilize pension money. You need to have a funded pension system. And I think an important message from Sweden to other countries is that you could have 99% pay-as-you-go system if you have 1% pre-funded pension, because that 1% will accumulate lots of capital. You need to start somewhere. And of course, if other countries trying to start to have a funded system where you should pay 5 or 10 or 15% of total wages into the system, it will be very difficult to have that discussion with your citizens, of course, because you need to put lots of your consumptions into the future. And if there is a low trust in the market, of course, you are unwilling to do that. And some will lose confidence in that sort of system. But if you can only pre-fund a small share, 1%, for example, if 1% of all we can call it because it's unexisting capital, if all 1% of all future pensions in Europe, if the present value of that was accumulated today, it would be a lot of money. So starting small can be an advice. You don't need to do a copy paste of our system, but you need to do national reforms on this issue. And of course, pension money or pension funds are unique in the sense that they have a long time horizon. Of course, If you want a more dynamic economy in the European Union, if you want more risk taking, and if you want to develop more global leading corporations, you need that capital that can bear losses and uncertainty for a long period of time. And pension money is unique in that sense, that the perspective is from start over a longer horizons than day-to-day savings in your banking account. So is it difficult? Yes, obviously it is difficult, but you need to have a frank discussion on fiscal and demographic realities with your population. And of course, the Swedish experience is that you need to involve your social partners. As a Swede, it's very surprising to see the discussion in other, or surprising, but it's a bit difficult really to take in the discussions in other countries where there is a conflict between trade unions and pension system reforms. Because very much of the Swedish pension system is run by the trade unions or are influenced by the trade unions. And the trade unions in Sweden actively participate in the system by running their own funds or by being part of the government funds as well in the system. And then, of course, you don't, as a citizen or as a blue-collar worker, you don't meet some financial guy or someone at the bank telling you what to do. You meet your colleague at the working place, say that, hey, Mike, you should spend 15 minutes in thinking about your pension. We can discuss it in our trade union meeting next Thursday. Please come. And that sort of commitment in workplaces is of course important. And the second thing then about this is, of course, I would say that Swedes would perceive this structure we have as not only as economic efficient, but also a cornerstone for social cohesion. Looking in many other European countries, of course, households are active in the capital markets, but most the very wealthy one, or those with high financial ability from start. And if you want to accumulate lots of capital, you need to include lots of people, and that is, from a Swedish perspective, also a question about social cohesion. Why should only the wealthy one or the most educated ones have access to return on the capital market? Why shouldn't that be the case for all citizens? Because if you're totally reliant on a pay-as-you-go system, it will be impossible to have an increase in pension system that exceeds the GDP growth. I mean, if you don't want to raise taxes to 100% in the long run, you will have a very clear ceiling on what you can have. But if you're invested in the capital markets, you normally have higher returns than you have GDP growth, right? So it's obvious that it's a good thing to take on some risk in those systems. I would say that this is very important to have those deep pools of institutional capital, and it is a discussion that we need to have with citizens and trade unions, blue-collar workers, and so on. But in the long run, it will benefit them more, both from higher wages due to a more dynamic economy, but also from having the returns from the capital market. And then this is perhaps easier, and we're very happy to see that Poland and eventually perhaps even Germany, they are doing a copy-paste, and this is something I think you could do more of a copy-paste of. Is our, we call it ISK, this investments and savings accounts, where it's very easy for households to participate because you don't need a lawyer or accountant or anything. Everything is just pre-printed in your declaration sheet, and it takes you, even though you do hundreds or thousands you sell and buy and numerous times of the year, you can declare it to the authorities within 15 seconds. And I think that because if you want many people to participate, you cannot have a system where you need to spend hours and hours and thousands of euros or have a family lawyer to be able to send in your declaration sheet to the authorities. That will exclude 80-90% of the people directly. So you need to have a process where everything is pre-printed, it's easy, it's the banks or the institutions or those who have the capital who sends in the information to the authorities, and you just need to sign it. Otherwise, otherwise, of course, it's very difficult to include many people into this. And also, of course, tax policy. The effective taxation in Sweden is somewhat below 20% on your capital gains in those systems. It perhaps could be 15 or it could be 25, but you need to have some, you need to incentivize it, of course, compared to other forms of savings. Many European countries, I would say, have it the other way around. It's incentivized not taking risk with your money, and that can be, of course, a problem trying to build a larger capital market. And one very important thing here, we're not against trying to educate people in financial literacy or having more of education in school and so on, but it is a learning by doing process, right? It's more important to start doing businesses, buying, selling shares, investing in funds and so on, than it is to try and just educate people about it. Most people need some practical exercise in this. And of course, you need to avoid lock-in effects and promote diversity in your savings. Within those very successful Swedish products, we don't have any limitations. You can own things worldwide, but we have a very strong home bias. I mean, the Swedish market overall is about 1%, but 40% of households' equity are invested in Sweden, without any limitations or any subsidies or incentives to invest in Sweden. If many people participate, I would say that this home bias is something automatic. And this European discussion that it should be European money for European corporations, well, you could have that discussion. Is it important? Definitely not, if you look to the empirics. Because if you involve lots of people, lots of households, you have a home bias in the system. And the Swedish case is a very clear example of that. So you don't need to be very concerned that all the money is lost to the US or elsewhere. I would say rather argue the opposite. If you now want to start households to transform their savings into investments throughout Europe, of course you need to be able to allow the citizens to have the highest possible return. If you want to lock it into low return investments, it will be more difficult, of course, to involve lots of people. Why should they? It's not very attractive. Then you can just continue with this guaranteed return products that you already have if you don't want to allow people to have the highest return on their savings. So the third point in this is, of course, to have good corporate governance. If you don't have trust in corporates, it's difficult to have investments in them. And about this, there's a lot one could say. But I think a very main and important point here is if you want to have lots of people being shareholders, you need to have minority protection in your corporate governance code to some extent. Otherwise, if you don't have a say, it's difficult to argue why you should be an owner, why you should risk things. I would say that 2 points are very important in this minority protection in Sweden. First of all, there is for those of you who are economists, I don't want to go into the law details, but there is a sort of Pareto optimal requirement that you're not allowed to make decisions that favors one owner over the other. It's a joint venture for all owners. It must be good for everyone. And if you own at least 10% of a corporations, you're allowed to get a general meetings and to get a discussion with those running the corporation on a daily basis and the rest of the boards. So having those two sorts of minority protections are, of course, very important if you want to include many people in this. But of course, quality of disclosure as well. And then another thing, when you have lots of owners, you will have this alignments of interest, of course. Short run, long run, high dividends, lots of reinvestments, and so on and so forth. It's easy to see this. And I would argue that, of course, to be very clear about profit maximization as the objective of any corporation is very important. Otherwise, it's very difficult to align lots of interest in doing that. And then, of course, well-governed firms, high return to equity, large interest in the stock market as well. And then, of course, this last slide, which is very important. I started by saying that you need to have lots of institutional investors. And then, on the other hand, institutional investors can only function up to a point. And to have a very high functioning capital market, you also need those super skilled people with own experience and with a unique ability to bear risk and to take advantage of different business opportunities. And if you don't have those venture capitalists, private equity specialists, and so on, it's very you will not get a market that is vibrant enough. And to do that, you need to foster another generations of capitalists, of course. I would say that that is it's very important. In Sweden, we have abolished wealth tax, inheritance tax, and gift taxes, and that is important to keep money or funds by the people that are obviously very well equipped to use them wisely. Because if the people with the highest skills to operate in the capital market, if their funds are taxed away, perhaps they will leave for another market, but also there will be less guidance for average households, and there will be less guidance for institutional investors if you take those people away. And institutional capital is perhaps not the best capital in every stage of corporate building. Sometimes you need those venture capitalists, private equity, and so on. And then eventually you could perhaps list at NASDAQ or anything else. But this is important. You cannot have a system where you punish people that are successful. Rather the opposite. You need to have a system where those who are great entrepreneurs of today can be the best angel investors of tomorrow, bringing that capital, the capital they earn from their entrepreneurial activities into the ability to help others with their financial decision making. That's important. And then, of course, avoid tax lock-in. I will not go into all the tax details, but of course, it's important that you can allocate capital within the capital market from somewhere where you earn less return to where you earn more return, to have a efficient allocation of capital. But that's also true in the real economy. You need to build a tax structure where someone that has a great idea here can transform those money to investments over here without having tax effects that you wouldn't have here, so to speak. So it's neutral to move money towards where they are doing the best job for society. All right, so what's the conclusion about this? I would say that there are 4 things we need to go for. Is it likely to increase long-run return to household savings? Can it be done without jeopardizing financial stability? This is, of course, a core issue. That's my main responsibility in my everyday work. When everyone else in the government wants to do things, I'm the one that says no, because we always need to safeguard financial stability. If we have crisis in the economy, you will lose confidence in the market, and you will not have households participating, and it will be very difficult to convince the trade unions to participate in a funded pension system. So you always need to safeguard the financial stability. And of course, will it meaningfully increase the pool of investable capital? Is it likely to lower the cost of capital to firms? And the combination of those 2 statements is very important, because it's not about building a capital market that will make lots of people in finance rich. That can be a consequence, of course. But those 2 things together says very clear that intermediaries are not the one that should profit from the systems, right? There will be, of course, be profitable intermediaries in a capital market system. But the point is that it must be designed for the savers to have high returns and for the corporations to have access to as cheap capital as possible. And if you have a very inefficient system, of course, you will have intermediaries taking lots of the advantages as just profits of their own, and it will not support either households nor the growth of the economy in general. So that is a very important design question in the system. And finally, before ending, I would just like to say that banks are important in Sweden, and sometimes there is a discussion in Europe, of course, where banks can see this as almost an enemy to their business model, right? Because it's very convenient to have lots of household savings. It's cheap money for the banks. But in Sweden, the banks have developed a system where they are very profitable for selling those products, being that intermediary with low fees, facilitating the system to work. And I would say that if we have a lesson to do in Sweden, it's about our trade unions must talk to their counterparts around Europe. And I would say that Swedish banks must also try to influence European banks that this is not an enemy to your business model. This is something that you can also earn money from. Otherwise, we will have very mighty opponents in trying to achieve this. So that is some of the lessons from Sweden from a more political perspective. I'm sure we will dig more into technical details as time passes by. Thank you so much for listening.
Thank you, Minister. Very interesting, additional points which I hadn't thought of. Also, when you speak about the capital gains and about the wealth tax, I think about the debate in France, which you know very well about this, what is going on there, and the whole controversies you have in that country. Anyway, we have a debate now with 3 panelists. There is Adam Kostiel from Nasdaq, Annemie Rombouts from the Belgian Financial Supervisory Authority, and Niklas from Euronext. Jacob from Euronext, and Niklas was the minister. On the different points raised in the report, probably could I suggest to start with probably Annemie to give your views, because Annemie is a vice chair of the Belgian Supervisory Authority, which is just across the street for those who do not know, and of course very much involved as a supervisor in this entire debate about what can we integrate, what works better at the local level, and of course a very complex debate at the European level. So, Annemie.
Yeah, thank you very much, Karel, and thank you for having me, and thank you for your very interesting insights. Thank you very much, Minister. Allow me maybe, Karel, to, in my view, what really distinguishes the Swedish situation from elsewhere in Europe. I see 4 things. I see, first of all, and that is, I think, key, that is alignment. I have the impression that all noses are in the same direction in Sweden, alignment between entrepreneurs, between the educational base, between firms and investors, between employers and employees, between public and private sector. And as you said, in the end, alignment also of the financial sector. Banks are facilitators, if I understand you well, whereas elsewhere maybe they seek their profit. So they contribute to the success of the system. So alignment is the first thing that really is a competitive advantage, I would say, of the Swedish situation. And that goes, in my view, alignment goes hand in hand with proximity, with local systems, because achieving alignment with 27 member states, I'm not sure. So when you talk about alignment is very specific to a local situation. So that points into the direction of national approaches, and that is what was said also in the paper of Mr. Tomadak. He said favoring national initiatives and making sure these local ecosystems can emerge. So that is one thing. Second, public trust. I mean, don't need to elaborate much on that. I think in other member states, people have to take into account the fact that their pension at one point in time can be skimmed off because of budgetary needs. I understand that is not the case in Sweden, so that is a very important one. And the third one, I think, is the willingness to engage with risk-based products, but not only on the household side. It's also on the entrepreneur side. I mean, the willingness to engage with risk. And then, I think these are the 3 most important things: alignment, public trust, and willingness to engage with risk. Characteristic that we do not see necessarily in all European countries, but they really deserve to be worked upon. Thank you.
I mean, you made me thinking, I'm a Belgian as well, so I have some accounts here. The minister said intermediaries should not profit. and we have a big debate at European level now about the value for money, which basically has to do with this, which is in the ECOFIN as well, let's say, which is now in trilogues. But, and probably, which brings me to another issue which the minister has not sufficiently raised probably, is the whole supervision, Euro supervisor. We have a big debate about who earns what from what, and whether basically the end investor has sufficient return. If I look at the Swedish model, I mean, it works extremely well. I know the whole debate about fees in Sweden, which are well under control. Why? I don't know. You could probably explain in a moment. But we have other countries where the fees are not under control and are a difficult issue. And that's why we have such a debate in the European Parliament about this. So meaning, before you bring investors in the market, investors are not stupid, will want to have, well, good returns. And that's what you see in Sweden as well.
Of course. The value for money discussion is a very difficult one from a supervisor perspective, huh? Because we in Belgium, we have tried to be useful in that sense, but mostly for funds, for collective investment schemes, where we try to really elaborate a benchmark, helping people to input management fees, entry fees, and to really try to benchmark what they are offered against the average of Belgian funds. But that's only the start. Insurance products also, it's a very difficult one. When we talk about TAC 23, branch 22 funds, we as an FSMA, we have taken a very close look to these products. We managed by persuasion to persuade insurance firms to lower fees. Some withdraw commercialization, so that is effective, but it's not an easy task because it's not black and white. And as for IPO fees, I mean, the banks that accompany IPOs, of course, these are very important. These are very important. And we looked at it very carefully over the last, for the IPOs over the last 10 years. And the fact that, for example, US firms or UK firms come and help companies IPO in Belgium has an impact on the fees. That is less transparent, of course, also for entrepreneurs that are sometimes surprised in the end by the fees they have to pay. Much more transparency would be needed, yes, I agree, when listed also for private investors, that's for sure.
And that's also a hallmark of the Swedish system is transparency, which you basically have overall, also in your corporate governance system, which is extremely transparent, which I know from a long time ago, and which, yeah, is, I think, something extremely important for financial markets. You need to have disclosure, openness for financial markets to function, and for investors to be willing to invest in the markets. Adam, I turn to you. Let's say you're an important operator in the Swedish capital market, CEO of Nasdaq Sweden. Of course, you will have many views to add to this. How do you look at this, but also how do you look at the European debate? And what could we learn from this for the European debate? Say, what should we do at European level, which still we do not know?
In 5 minutes.
And yeah, 5 minutes. We will have some questions to you as well afterwards.
No, but first of all, I'm, you know, as a Swede and as a European, I'm extremely proud of what we have in Sweden. But I also realize the complexity of exporting this. You know, so all we can do is advocate, because at the end of the day, you can't regulate this. You have to reform, and I think the fact, as the minister said, about that the concept of, you know, whether it's capital market union, now it's savings investment union, and maybe it will be called something else eventually, but at the end of the day, saving is investment. And I think we've allowed households to take risk, and that risk has given return. And I think on the context of fees, I think it's about financial literacy as well. I think that we have a very educated retail market, and we continuously educate the retail market as a society. And there's a dynamic of education because there's competition on all levels within the value chain. So I think there is no acceptance for products with too high fees or that do not deliver value. So from that perspective, I think ultimately financial literacy is something which is key here. And you saw the numbers. Every household is exposed to the capital markets, so there's a very high degree of financial literacy there's a high demand from the markets, and there's a good competition amongst the providers within each level of the value chain to make sure they are creating value at a reasonable cost. And on the context of IPO fees, well, we always debate about the US markets being the best markets in the world, and there it costs 10 times as much to list. So I'm not sure it's the solution to focus so much on the IPO costs. What I think we need to focus is on the value of being listed. Because if you create the value of being listed and the value of achieving a listing over time, you will create competition, you will create the dynamics for institutionals to participate in IPOs, you will see that banks will want to participate in supporting companies in transitioning into the public markets. That will mean competition, and competition will drive down fees. And so over time, I think the fact of trying to regulate the IPO fees is not the way to go. I think that you have to create a bigger pie where there are more players involved, advisors, investors wanting to participate in seeing the value of bringing a company to the public markets. Because at the end of the day, we've also had this transition now where the private markets have become so strong, both on the debt side, but also on the private equity side. And they continue to thrive in a relatively unregulated world. And the issue here is that a lot of these companies have become so big that now when they need to transition out of the ownership of private equity, they are trying to find solutions where they're creating continuation vehicles, they're creating new structures to keep them private, because there is no destination for them. And that destination ultimately for many of these companies, the larger companies, for example, we had Verisure recently, is the public markets. And how do you make sure there's a better symbiosis between the private and the public markets? Because at the end of the day, if you don't create that symbiosis, you will not create the value chain of what we've been able to create with a stronger private market. But equally important to make sure that the true value creation is when it comes into the public markets, because that's the most democratic way of investing. It allows not only a few to participate in that wealth generation, but to create that society gets to take part of it. And that's what we've allowed in Sweden. You know, for Verisure, we had 60,000 retail participants on that IPO. It's a unique phenomenon which we had to explain for the company, we had to explain for the international advisors, but it was a fantastic dynamic for this company, for liquidity, but for engagement. We need to focus on the transition and the symbiosis between private and public markets. And we need to make sure, rather than focusing on the fees of becoming public, we need to focus on the value of being public. And that's what I'm seeing, a lack of momentum in terms of really this deregulation wave, where we've kind of overregulated the public markets and not made it attractive for companies to see the value of being listed. And at the end of the day, it's a combination of manageable regulation in a sophisticated way, which is the minister also mentioned the self-governance aspect and so on, but it's also a fact of how do you make sure that institutional money is truly engaged, not only with large companies, but also smaller mid-sized companies. So I speak to a lot of the Swedish private equity firms that are very active in the German region. They say they can't list these companies in Germany. In Sweden, they could. Now, why aren't they listing them in Sweden? This is something I'm debating with them, because they should be listing them in Sweden then. But that's something else. But at the end of the day, that transition from private to public is where ultimately value creation takes place. Look at Google, look at Amazon, look at Apple. These companies, you know, all these good companies that have developed under private markets, when they transition in the public markets, you engage the full capital value chain. And you can create value in the pension funds in a different way than just allowing a few to take part of that value creation. So again, focus on the symbiosis of the shift from private to public, because that is where the value is created, and then allow for competition throughout the value chain. Institutional money, advisors, etc., fees will manage themselves. That's my opinion on this, and I think that's what we've seen in Sweden. And of course, you have to regulate certain components of this. But at the end of the day, if you educate the customers, they will also know how to navigate products that are not competitive or services that are not creating value.
If I could add two questions to this because of private capital, which was mentioned by you and by the minister. I mean, is private capital less developed than Sweden because your IPO market is much more developed? And then secondly, on the IPO market, are your listing standards, because a lot is still done by the exchange on the listing standards level, for example, much more attractive than the ones in Germany?
No, no. So we are, I think our listing standards and our listing requirements are fundamentally the same across Europe. Fundamentally the same. I think the difference is this concept of self-regulation, which is basically this discipline that we've created amongst companies. Because at the end of the day, for a company to list, you have to have good governance starting from day one. So this governance level is not only in the public markets, it's also in the private markets. And to your question about our private equity, is it less developed? It's the most developed in Europe. EQT is the second largest private equity firm on a global basis today. That started as an entrepreneurial firm in Sweden. Behind them, there are a long range of private equity firms that have become now European players and are growing in the US and growing in the DACH region and growing across Europe. These are Swedish Nordic players that are fundamental. But the big change, the big difference is that 30% of private equity firms transition into the public markets in the Nordics. 6% transition on a European level. And that's where the fundamental difference is, that companies being sold to Microsoft and Apple or larger industrial players, that's not value creation over time. Value creation is if you create strong independent companies that thrive in the public markets over the time and allow for the participation of retail to participate in that growth, pension money to participate in that growth, but for them to thrive as independent companies. If Spotify would have chosen to sell off to Google or Apple at the time, we would not have seen the ecosystem that we have today. And how do we make sure that the symbiosis between private and public stays strong? We have ideas on how to strengthen the Nordic markets further on this aspect. So I think we have a great model in Sweden, but we can do it even better because we have a momentum that many of the European markets don't have. But equally important that Europe does these reforms because we need a stronger Europe. And at the end of the day, we should not focus on, I think the big issue is that the private markets has allowed to grow so strong in parallel to the public markets, but no one is really focusing on this transition and the symbiosis between private and public.
So you have the perfect, what is called funding escalator in Sweden, say all the different steps are in place, which could be kind of used.
Perfect is a strong word, but
it certainly is compared to many other markets.
Compared to many other markets, yes. And the difference is quite symbolic also within the Nordic markets. So the Swedish market stands out in particular, but we definitely see an overlap now because it's the same advisors, same investors, same governance culture to a certain extent. So the overlap in the Nordic markets is very strong, and there's a potential to create a stronger Nordic presence over time. But at the end of the day, it has to be together with Europe, interoperable with Europe, because otherwise we will lose out.
But that is part of the problem, to say what can be kept like it is locally or what has to be kind of interoperable with Europe. Anyway, we move to Jakob. Jakob works for Euronext, but before worked for ESMA and also in the European Parliament. So Jakob can also speak about the European policy side. He's a member of the executive committee with the Euronext, also another exchange, but from a totally different state, where there's much more of a problem, let's say, of creating these startups, let's say, and creating this scaling up. Jakob, how you look at this from your perspective?
Thank you.
Yeah, it's on.
Okay. Thank you very much. Fascinating story. Thank you, Minister, for presenting it, and a number of inspiring points. And I think we see now a renaissance of member states trying to copy some of those solutions. Sweden. At the same time, we also need to be aware that the journey that Sweden has gone is not the journey of the last 5 years, but it's a journey of the last 30, 40 years. And I fully agree that what Europe needs going forward is a much larger liquidity pools, which are on the one hand built by the retail participation, on the other hand driven by the pension funds. And this is something what we what we are lacking. The question is, what can we do in order to speed up the process? Because we cannot in Europe afford to have 30 years where 26 other member states slowly copy the Swedish model. Some countries are more advanced than the others. And here the question is whether we can, because of the single market, whether we can cut some corners and move straight into building not the national liquidity pools, but cross-border European liquidity pools. And I think here a number of initiatives is good. I mean, a number of initiatives putting forward by the European Commission recently can improve it, definitely on the retail side, and we've seen slow pickup in some member states on the savings and investment account. The reality, however, is that the pickup of the savings and investment account is also very much reliant on the fiscal space that each member state has. And Tara, you mentioned the situation in France. I mean, the situation in France in that respect, but also in Belgium is not much better, is less promising on getting wider liquidity pools there. In the meantime, I think it will be important to, and I fully agree with Adam, on making public listing and making a public company quite attractive, is how to leverage on the existing liquidity pools and make sure that what is already there in terms of the public companies is brought to the wider attention of investors. And I think the importance of not only of the listings in Europe, but also of the lit trading is quite important. The other aspect which I'd like to underline, and I here also agree with Adam, is the tendency and the political push for more simplification and burden reduction. And here I also believe that needs to be done on the wider European scale. So if we were thinking about listing standards, it's important that the listing standards are harmonized on the European level and they are simplified on the European level. So following on the Listing Act and then the initiative that we started at Euronext, the Common European Prospectus, these are the examples where we can go with a more simplified framework for listed companies in Europe. And then also for the intermediaries themselves, it will be quite important to ensure that there are more initiatives reducing burdens reporting, and also allowing for a more competition. Because this is something which I missed in the presentation area, is the aspect of the competition. Of course, on the fee side, for retail investors, the bigger the cake, the more fee pressure it is. And I started my career in Austria, where there were 26 asset management companies, and I worked in one of them. But there were maybe 200,000 investors in asset management products at that time in Austria. So of course the fees had to be high because the cake was rather small. What I kind of miss is the issue of the competition in the infrastructure space. Because if you have a big cake, but then you have only one exchange and one settlement system and one clearinghouse, of course I mean, I'm not saying that it's not working because of the bulk of the cake, the fees can stay relatively low. But what we have in Europe, what we can explore better is through single market, we can ensure that through cross-border competition within Europe, we can get a better deal for the investors. And at the end, and the last point is supervision. And here, clearly, looking at the Swedish model, you have one ecosystem in Europe, and I'm speaking here from perspective of Euronext operating in 7 countries, and maybe we'll know next week where we'll be operating in 8 with the Greek deal goes through. The harmonization of regulation and supervision is quite important, and we are here talking about the level playing field between the member states in the number of areas in financial services where we believe that Europe deserves a clarity and no more gold plating in order to allow the cross-border activity.
Okay, thank you, Jacob. We can open it up for questions. We have about half an hour, let's say, to have questions. I don't know whether also the minister wants to respond to some of the panelists. And then Annemie also still wants to respond. And then, of course, we have the authors present. We have Apostolos, the main author, who's at the back. Let's say you can also raise a point. But Fred has also contributed to this debate. And, of course, we're open to any questions you may have. But Annemie, you still wanted to raise a point?
Yes, I wanted to come back on Adam's point, which I fully agree with, about the symbiosis between private equity and public markets, and about the added value of public markets. What we see, and we had discussions with private equity players during summertime at the FSMA, they do not necessarily see the public market as an exit anymore because of valuations. And so they create, as you said, continuation funds. So it's a chicken and egg story. Huh? You should first get your public market, boost your public markets and find your unique selling proposal as a public market for private equity players to be able to use it as an exit. Or how do you see that?
Well, I mean, I think the big debate now is if the public markets are overvalued or not, but because of the AI phenomenon. But right now, valuations are, this will always go in waves. There will always be a time when the public markets, there's a perception of a dispersion between the public markets being less valued than the private markets. Yeah. But the reality is, the private markets is you and me making a decision.
Yeah.
The public markets is the reality, you know. So the transition from private to public is very complex, and you see a lot of companies that need to adjust to meet reality. And the ability to make decisions between a club here on what is valuations and what is value for you and what is value for me, it's much easier if it's just us two. But so at the end of the day, I think this disparity between the private markets, the stronger the private markets will become, more funding, more players, the more that price formation will take place outside the public markets, which is a concern overall. We also see that overall as a separate debate, the discussion between where should price formation take place, within the banks, systemic internalizers, or in the public markets. And so I think, you know, I think the issue here, when you refer to private equity saying that there's no value of the public markets, I would say what they're actually saying is that their local public markets are not engaged. And this means that institutions, fund managers, advisors are not engaging with their companies to bring them to the public markets because they see that as too much of a heavy lift. They don't see that there will be a big engagement with institutional money to support them and in that transition, etc. And also keep in mind that, you know, in the US, it's not any company that can list. It's only typically very large companies that can list because it's so costly, it's so burdensome. But when they do list, they get a lot of traction, traction with institutional and retail money, etc. What I think, if you ask the Nordic markets, and particularly the Swedish private equity firms, they see the value of the public markets. They see the fact that there is an ability to list companies. You know, we typically say that you cannot list a company in Germany below 1 billion euros in market cap, because there's no advisor or no institutional advisor that will want to engage around such a small liquidity event. 90% of those 500 companies are companies that are below 1 billion euros in market cap. So there's a fantastic value creation there. And that's what you need to engage in order for you to get the response, yes, we see the value. Then the valuations, that's something different. I think very few people would say that the public markets are undervalued today. So yes, there are sectors, for example, the biotech sector is a bit undervalued today. You have real estate sector that's trying to get back from what was a boom, etc. But fundamentally, the public markets and the indices are quite high. So that's why we're also seeing a spillover in our pipeline that private equity are saying, yes, the valuations are good now, let's engage. But in Germany, it's 1 or 2 companies, whilst in Sweden, it's 20, 30 companies. So that's the symbiosis that we need to create. And the last point on this is that what my big concern is when I we talk about the governance model, etc. When I talk to board experts, My big concern is that when I talk to Swedish board experts, more and more they're saying, yes, I take 1 engagement in the public markets, but I take 4 in the private markets, because there I can get remunerated. I don't need to talk about policies. We talk about business, etc. That's my big concern, is that this world of the public markets is over-regulated, over-complex, whilst the private markets is all about business and value creation. And I think that's where we need to focus, that more people want to be engaged in the public markets, investors, advisors, board people, governance, etc., because then you start creating this symbiosis. And that's not what we're seeing across Europe. Sweden stands out, but it can also become better.
Okay, I look around for questions. Who wants to kick it off? I mean, several questions here in front and there. There's a microphone here, James, and then William.
Great, hi, thanks. James Cunningham, I work for BNY, cover capital markets policy. So thank you very much. Thank you, Minister, for your speech, and thank you for the panel. This is a very interesting topic. Of course, it's a topic which has been around for a long time. We've been talking about this for 20 years. And I think we're frustrated. So now we're at opportunity for another start on this exercise. A lot of fantastic ideas, I think, have been mentioned, so very important ideas. But I've got a kind of 2 questions. We heard quite a lot about trust, about alignment, about social consensus. And the question that comes to mind really is, given that we know we will get controversial proposals fairly soon, we know that there will be a lot of opposition to some of these proposals, how do we get that alignment, consensus, trust? And perhaps a second, more specific question related to that. We heard about literacy, financial literacy, and learning by doing, which of course I think is a fantastic idea. Is this something we can carry across to the public sector, meaning to the trust area? Can we build trust through learning by doing? If yes, how? Do we have suggestions? Anyway, thank you.
Can I take a second question as well at the same time?
Thank you. Willem de Velder, BNP Paribas. I have a plea and a question. The plea is that some organization, entity, research think tank would publish every single year a report on the cost of non-capital markets union. If you look at the progress that we have realized in CMU over the years, I think there was room to do better. And the concern that you now have is that with SIU, the Commission approach is, I would say, quite rightly so, to make recommendations. But the concern you could have is that within 2 or 3 years, you would observe that little effort has been done. Part of that report, for instance, could be to do a counterfactual analysis of what Sweden would have ended up in terms of financial wealth or GDP per capita if it would not have gone down the road that it has taken. Then the question to the Minister, would you consider that starting with auto-enrollment for a very small percentage is actually the easiest way to get things going?
Auto-enrollment for what? For in pension plans, you mean? Exactly. Okay. Minister, you want to start? You want to kick it off? Oh, you can sit there and
the question was if auto-enrollment in funded pension system was the easiest way to do it. I don't know if it's the easiest way, but I would say it's the most important thing to do. Otherwise, where will you find enough capital to accumulate if not within the pension system or within pension money? That can be a risk for a long period of time. So yes, I would say that that is the most, because that's where the money is. So yeah, yes, but not. I would leave the word easiest out because I don't know if it's easy, but it's the most important. It's the most important thing to do. National reforms on pensions, and of course retail participation broadly. But pensions, much more money. So yes.
Okay, and on the question from James, or a reaction from the panel?
On the alignment and the social consensus, I think that brings us back to to the level at which you want to achieve that. I think there it's important to start small and local, because it's difficult enough talking about symbiosis between private equity, for example, and public markets. We talk to everybody. There is no alignment in Belgium, for example, right now. There is no ecosystem anymore. No banks that accompany IPOs under 1 billion. So we have to create that again, and it is possible. It is possible, but at local level first, I think. On the second one, on education, I think, first of all, very happy that this is a topic right now at European level. But also, as Adam said, it's not only about education, it's about learning by doing. And for that, you should have working capital markets and possibilities for people to learn. Here in Belgium at the FSMA, we engage very much with teenagers at what we call our Wikifin lab, to learn, to teach them what is the stock market about, what is the real, how can you contribute or invest in the real economy. And we play games with them, learning them what is risk, how does a company react to news, etc., etc. So that is the educational side of the thing. But I think education is as important for entrepreneurs, because they see often the stock market through the filter of bankers or lawyers. Regulators are a faraway entity. So I think there is room for closer engagement also with entrepreneurs to give objective information about what it is before they are courted by private equity or when they are courted by private equity. So it's, as you said, all about working together, I think.
Yeah, maybe from my perspective on the question of trust and alignment, I think it really depends on the topic and what you mean by opposition to certain initiatives, including legislative initiatives coming up. I think there's a lot of trust and alignment on the objective to reduce reporting and burdens, administrative burdens by 25%, which is the flagship commission approach, where I saw typically I would expect regulators and supervisors being more concerned, but then immediately on the European and national level, you had commitment to reduce burdens on that level, and clearly a very strong alignment and commitment, and even wide, let's say, further demands from the industry on this side. Where I see a bit less of a trust and alignment is on perceiving European capital markets really as a European capital markets as opposed to national capital markets. And here, I mean, it starts with how far we see the local ecosystem as a pure local ecosystem, and we as Euronext have been quite committed through our federal model. We have, despite centralization of the trading platform across 7 countries in one, we still have listing teams and firms working with local brokers in all countries where we operate. We do see more potential to scale up to create the really European capital markets. And here, when you want to create your operations as a cross-border corporate, you are faced with different approaches on the more local level. The second point is obviously the competition policy. We see it's a bit further away from capital markets, but we see the discussion on for example, UniCredit Commerzbank merger. We are not seeing European banks as European banks. We continue to see them as national banks and national champion. And I think this is where we could work a bit harder on trust and alignment.
Many questions, but no, I think on the topic, just building off the last statement there, I think we're also a big believer of being the best provider to our local markets, but I think we want to see more homogeneous interpretations of different aspects. I think this regulatory arbitrage that's taking place across Europe is not beneficial for the markets. We definitely see, if you look at the US model, there is interoperability in the sense that there is one DTCC that's managing the settlement and so on, but there's competition amongst exchanges. I think that's a very healthy model. So we see, the need for more interoperability on the settlement side to make sure that it's easier to transition between markets. But ultimately, you need a local provider to make sure that you're serving the local market, but also at the same time opening up the model to be more attractive for international investors, acting according to international best practice. So this is a balancing game, but of course we're also serving 7 markets within Europe, and it's difficult to navigate different interpretations and different local interpretations. So that is a challenge. In terms of so there is an opportunity for more homogeneous markets, but definitely not creating one market is not necessarily going to solve. I think one inner market, I think, is a bigger issue here. How do you make capital flow? How do you make services flow? So an apple is an apple in each of the 27 markets, or judged as an apple in each of the markets is more important. Because if you look at Klarna, they would have listed here in Europe if they would have also seen a stronger opportunity to expand in Europe in a more homogeneous way. Right now, the opportunity they have in the US is they get access to the US markets, therefore they can expand in the US markets in much more aggressively, and therefore being listed there makes sense for them. If we would have had a stronger inner market here, then they would have also been more focused on the European expansion, because overall it's a bigger market, it's a bigger dynamic. So I think there's a lot of focus there which will spill over to more companies being focused, being listed here as well.
Could I ask you, Adam, why do we still not have a European-wide IPO? I could ask it to Annemie as well. We have legislation. I think our legislation on IPOs has been changed 5 times since early 2000 on IPOs, but we still do not have a European IPO, and we still have national supervisors who say, I need to have it in these and these and these rules, and in my natural language, if you want to appeal to national investors. And that is the big burden for Klarna, and that's why, Klarna cannot list.
No, I agree, and we have this debate in Sweden as well, and I think, if you look at the Swedish market, it's the market, I would say, without no offense to anyone else, but it's probably the market with the highest literacy in English on a global basis. If you look at the retail market, they're investing in the US, they're investing in different asset classes on a global basis. But we're still concerned in Sweden about that the ongoing communication to the market should be in local language. It has to be in local language. Now, if you look at talking to a big international firm, and you're explaining that, they see that as a restriction, and they see that as a concern, and therefore they need to work around that in order to find a solution. Now, with the listing act as a prospectus in English, great, but that's a one-off. The ongoing communication is equally important. So again, we have less of an issue in reality in Sweden, but there's a perception that the local language is a protection for the local for the retail investor. Yes, so yes, I agree, but not necessarily everyone agrees on that. But I think it's a burning issue which we're not addressing, and it needs to be addressed. But so you're right, there is this issue on the back of the sort of European-wide IPO. Yes, we had 60,000 retail participants in Verisure. It's a global European company. They could have done a much more European-wide retail offering. I think it's possible to do. The question is why it's not done. If you look at the institutional flow, it's definitely international. So, and that's driven also by many other factors. The fact that we were allowed them to list in euro, all these different dynamics created a bigger international interest. And then it was a significantly large deal, which attracted a lot of international capital. Smaller capital transactions are more locally biased, and that's always going to be the case. But we see 50% of our large caps are owned by international money. 70% of all trading is coming from London, Paris, Frankfurt. So it's an international market. I think we need to adapt it to make it more international, because I think that would open up for more attractiveness to list and act locally as well.
Debate which we also need to have at European level to say, look guys,
Yes.
There are things which are fundamental and other things which are superficial, and we need to cut through that. Anyway, I will take some other questions. I see a question here, there. There's a microphone coming, and if you please introduce yourself and have pointed questions, not too long, please.
Thank you. I'm Vasilis Psaras from the Havilland Europe. My first question goes to the Minister. Because you mentioned the ISK, I think that it's undeniable if we look at the savings and investment accounts communication that it's a great success. You offer it through banks and fund managers. And because I want to know, at least based on the document from the Commission, I want to know if you are exploring the potential of adding insurance operators or other operators to provide the ISK. And my second question goes to Jakub, because you mentioned the topic that I came prepared to ask, competition, and especially competition in the stock exchanges. The US has proven to us in the technology you need monopolist power to drive more innovation. And I'm wondering whether you see that trade-off in the stock exchange, and how can we safeguard competition? Thank you.
Very, very good question, but we'll take two other ones. There was one here in front, yes.
Thank you very much. Good morning, everyone. My name is Daniel Nagy. I'm from Forefront Advisors. And I would have two questions. The first one is that the European Commission will submit a proposal for regulation to the European Parliament and to the Council in December, probably in the first week of December. And this is on the Savings and Investment Union. And the focus of this proposal will be integrating market infrastructures and centralizing supervision across the EU level. And then it goes through the standard legislative process. So my question is that how do you see that it can catalyze the savings and investment union developments and the discussion? So what dynamic do you expect from the market after this report will be published? Will it provide more clarity maybe? And my second question relates to another element that has been less covered today, which is the innovation part of the market integration. So distributed ledger technology is also highly discussed these days. So what do you expect from distributed ledger technologies? How it can catalyze market integration efforts? Or also can it maybe, simplify the processes, lower the cost, increase transparency in the market? But also we need to balance financial stability and the governance part. So what do you expect from the DLT part and the Commission proposal? Thank you.
Thank you. And there is a question here. Yes, there. Gloria, yes.
Hi, thanks. Is it on? Janos Almbachaman from Table Media. I have a question to Ms. Rambout. And you said that in Belgium, this alignment that you talked about has been lost, which means to me, or seems to imply that it has existed before. So maybe you can tell us a little bit more about like why was this lost and how can it be reclaimed, and maybe this goes for the other Belgian on the panel as well.
Okay, we start with the minister again. On the ISK and on the...
Yes, there is a mirror legal framework for capital insurances that is equally the same, and it could be used, for example, within closely held corporations to accumulate capital as well. So it's a popular product with similar objectives. So yes is the short answer to the question. And maybe just a remark then on insurance corporations and pension funds as well. Of course, having many European countries, they have large insurance corporations, of course, and lots of insurance products. And if it should be meaningful to accumulate lots of pension capital through the capital markets, then it's of course very important that those products are not guaranteed, or at least not all of the products are guaranteed, because then you cannot take on the risk that is necessary, and then the capital will not be useful. So that's just a remark of my earlier answer, and the answer to that question is yes, there is a legal framework for insurance products as well.
Question of competition between the markets and how we kind of make them more interoperable, capital markets?
I think actually Adam makes an excellent point that I mean a common framework or legal framework is important, but of course if you face 6 or 8 or 27 different interpretations of the rules, it's very difficult to operate. But also of course that the financial market will always be a mirror of the reality. So of course I mean having a more built together common market overall is of course a key here for corporations, as you mentioned, to be listed or to be active in the European Union or get funds from different sort of savings. So yeah, I think a common legal framework is one thing, but interpretation as well, and perhaps that is even more efficient than having a common supervisory entity.
Which brings us back to the issue of, I would say, enforcement. I mean, if we have, we need to have strict interpretations which are the same overall and which are probably sometimes lacking. I turn back to the panel. Annemie, Adam, Jacob, any further comments also on the DLT issue, technology in the markets?
Maybe on the DLT issue.
And then, yes.
Yeah, we've just launched, the concept of tokenization in the US, and we're very focused on that. We see that ultimately as a way to create more efficiency and more access at the end of the day related to the post-trade side. So I think it's there's a lot to be done. I think if you look today at the trading environments, they're very efficient. They're very, cost efficient overall. I would say, I think Euronext runs a model which is very similar to us, one trading infrastructure for, several markets, etc. I think much more can be done on the post-trade side. If you look at the Baltic markets, which we run and operate, we've created one CSD, we created one post-trade infrastructure for 3 markets. Europe needs to be inspired by that kind of reform because at the end of the day, that's where a lot of the costs and the challenges lie in creating this cross-boundary or cross-border transaction flow, which is needed across Europe. Because at the end of the day, creating one market will only benefit a few. Creating stronger local markets will benefit many. The issue here is, back to the minister's point, is that we're now, interpreting 27 versions of these markets. We need to allow for more sort of homogeneous interpretations so that we can create more flow of capital, more, flow of operators, etc. Will a Portuguese investor invest in Swedish IPOs? Not sure. Maybe if it's a big brand like Spotify, Klarna, very sure, yes. But if it's the 90% of our companies below 1 billion euros, probably many of the Portuguese investors will not even have heard about them. So at the end of the day, we need to create stronger local markets that support stronger local. But at the end of the day, the symbiosis between private and public, this is not a local issue. It's a European issue that needs to be managed. And that can be managed by this 25% lesser regulation of the public markets, because then you can create transition and you can create value in these companies seeing the value of becoming public markets.
But Adam, you're saying interoperability and enforcement works in the Nordic markets overall?
Well,
I mean, stricter, if you look at it from your perspective,
no,
the 3 or 4 markets.
No,
you're 7 markets in which you are. And you
look I would say on a trading perspective, it works. On a settlement side, it doesn't work, or it works, but it's not efficient. And I think what I raised was the Baltic example where we have made it work, but that needs to be an inspiration for the Nordic markets, but for the European markets and the Nordic markets with Europe to create more interoperability. And the issue is, if you create more interoperability, you then have to create, and if you're connecting the markets, you also have to connect the interpretations of things, because otherwise you're creating a very unpredictable navigation. For example, we have Finnish companies that are dual listed in Sweden. They have to interpret 2 different ways, 2 different interpretations of MAR, as one example. That's not beneficial. So at the end of the day, us as an entity acting across 7 markets, potentially better regulated on a sort of central level. But the local markets, at the end of the day, we need to make sure that the local regulators are also looking at the vision of what does it mean for us to be a part of something bigger rather than just managing the local markets. Because at the end of the day, the markets are not just local. You want it to be attractive for international players. You want it to be attractive for companies to be able to attract international capital at equal terms. So that's the challenge that we need to navigate here, and that's the discussion around centralized supervision, I think.
Annemie, questions on supervision, interoperability, cooperation between supervisors, and probably also on the Belgian issue, which was raised?
Yeah, thank you. On supervision, of course, we agree that there should be level playing field and convergence. That's for sure. I mean, that is without any doubt. Not going to preempt on the council discussions on the Commission's proposal, but for sure. I mean, what is the best way to achieve it? I leave that behind. But that there should be a level playing field, I fully agree. Coming back on the European IPO. something that is also interesting, and I would be interested to hear from other countries. For example, when we look at our IPOs, very few companies ask for a European passport. It's only 12% of our companies, of our listings in the last 10 years asked really for a European passport. So that shows that they are addressing a local market, where there are, of course, international investors, as you said. I mean, they are surely present at Euronext Brussels also, and Euronext at large. But that is a symptomatic issue, I think, the fact that companies don't ask for a passport. As for the alignment, and your question about the alignment, I think, where did we lose it? I think it's an evolution of the market space. We had boutiques, smaller players that accompanied smaller IPOs. These boutiques in Belgium do not really exist anymore. And today, bankers tell us it's not a profit center anymore for us to accompany IPOs. Law firms tell us the same. So it's not profitable anymore. Of course, we need, in the first place, a thriving industry and new projects. But there are new projects in Belgium, and many of them in the tech space, in the biotech space, in real estate. We should, I think, every stakeholder they do not see themselves anymore as part of a chain. They see themselves in an isolated way. And we should convince them to see themselves again as part of a chain, and to think in the longer term and beyond the immediate profitability of a business case. I think that is what we need to do. And that is what we're trying to do, engaging with of course, the markets, with Euronext, with entrepreneurs, with private equity players, with public investments also, to create a space where we can keep each other informed of initiatives, of entrepreneurs, of new companies that might be very valuable companies to go listed. That's where it starts, and that's what we're trying to do right away, right now, in fact. Thank you.
Jacob, you still want to add something, and then I think we'll have to close this debate.
Yeah, thanks. So maybe on competition and also on the market infrastructure package and the DLT. So indeed, the technology has made the trading space completely different than it used to be. So a few years ago, and actually, the pace of the technology improvements is much higher today than it was 5 years ago. Just give you an example, we hire across the Euronext world almost 3,000 people. 1/3 are IT engineers. So we invest heavily. I know that there's a lot of talk about the newcomers, but it doesn't mean that companies like Euronext or Nasdaq that we are more of a technology company than actually financial market infrastructure. Where the problem is not the number of exchanges in Europe, of number of national exchanges, because they have also the kind of local ecosystems to serve, and they have also the same legal framework that they adhere to. Of course, there are differences in interpretation and supervision. Where the real problem starts is where there's no level playing field for competition with other technology providers, which are not regulated in the same way, or they're not even authorized. And this is the problem where we are facing when only 1/3 of trading happens on the lit markets in Europe today. So the price discovery is to a large extent somewhere else, and that creates the problems with investor protection, with financial stability, and the fair and orderly markets. And here, I think, where the problem of the competition is. My earlier point was about the EU competition rules regarding to potential mergers and acquisitions, but this is something where we might see some changes, but from the DG competition level, where I'm less optimistic are the national approaches and the national ownerships there. On the market integration package and what the dynamics it will bring, well, everyone is very much focused on the supervision bit, and that's what the media focus a lot. And I see Catherine in the room; that's her hobby horse. And how much bigger, how much more staff ESMA will get, and so on. But I think this discussion goes a bit in the wrong direction because, of course, making sure that cross-border providers like Euronext or Nasdaq are less exposed to gold plating and then different interpretations, and the listed companies are exposed to different MAR interpretations is the one thing. But what I'm much more positive in terms of the package which is coming are the things which are not related to supervision. So increasing the interoperability, increasing the competition, increasing the use of Target 2 securities platform in order to make more consolidation in the post-trade space and make actually the costs of settlement lower to the investors. The transformation from directives into the regulations. The issues related to market access on the CCPs and the clarifications there. So there's a lot of important things which will bring, hopefully, if our expectations and the legislative process confirms that, will bring European market more competitive and also allow for more consolidation in the trading and the post-trade space. And DLT is one of the elements there as well. And this is the technology we're also looking at, and we'll need to make sure that also the regulatory framework helps to use the DLT in a responsible way, where the substance of the financial market infrastructure business is less important than the form. Thank you.
Okay. And with this, I think we can close this debate. I would like to thank certainly Jakob, Annemie, and Adam, but above all the Minister for coming and for sharing his thought on this subject. I don't know whether you want to say a final word. No, it's okay with you. So I found it extremely useful, very interesting. I learned some other elements, and also interesting to hear the reaction from the panel. We at ECME organize these debates, so if ever you have other things you want to raise with us, let's say, please come to us. We are a membership organization. We have organizations like Nasdaq and Euronext which are members with us, but also others. The banks are also members with us. But also let me thank the Swedish Bankers Association as well for having come to us, let's say, and asked to do this study, let's say, which I think we have provoked or helped, let's say, to have a good debate on these matters. And I think there's a lot to be done, as I learn, at the European level to bring this forward. As we know, probably since a bit too long time, but hopefully this will be an impetus, let's say, by the concrete example that we can move forward. Again, thank you, Minister, for joining us. Thank you, panelists, and thank you, all of you, also for the questions. Thanks a lot.